South Africa's consumer price index has reached another 13-year high of 7.8% in July. This is up from 7.4% in the month of June. Now, according to the latest figures from Stats SA, the current hike in CPI is due to the continued rise in fuel and food prices along with global inflation. July's rate is above the upper limit of the South African Reserve Bank's target range of 3 to 6%. Now, the consumer price index jumped by 1.5% between June and July, only the fourth time this since 2008. Well, let's get more on this story now, and I'm joined by Patrick Kelly, who is the Chief Director of Price Statistics at Stats SA. Mr. Kelly, thank you very much for making yourself available at such short notice. The latest readings, much higher than what the market had anticipated. I'm going to ask you two questions in one. The first one is, what's driving these inflation numbers ever so higher? And importantly as well, can you break down the cost of the non-durable goods for us? These are basically the items that consumers buy most frequently.
Yeah, good morning, and thanks very much for that. You're right. So at 7.8%, we are at the highest level since May 2009, which really does seem quite an age ago. You're right that there are specific non-durable goods that are really driving the inflation at the moment. So non-durable goods, we are really talking about those kind of items that we buy on a day-to-day basis, like food or fuel, and these are really driving inflation over the last couple of months, both in the country as well as in many other parts of the world. So if we just break that down a little bit, certainly food inflation is running higher than the previous month. So we're at 9.7% compared to the 8.6% that we had recorded in June. Fuel prices are also a major contributor. If we look back 12 months, which is the annual rate of inflation for fuel, we're at 56% increase for fuel, and obviously everyone who does drive a car experiences that each time they stop at the filling station. Perhaps the other item just to highlight at this point, in July in particular, municipalities introduced new tariffs for things like electricity and water and municipal rates, and we incorporate those then into the July CPI. Sure. And a bit of a mixed picture there this year, where we see electricity prices actually increasing slightly less than they did the previous year, so 7.5%, although water and municipal rates have increased by higher amounts. So there we're looking at 8% for water and 4.2% for municipal rates.
Let's then talk about the numbers that, particularly those who rely on public transport, they've certainly not escaped this pain. You've already touched on fuel prices. The taxi fares, they jumped in July. Can you take us through those numbers as we drill deeper?
Yes, certainly. So we do survey taxi fares whenever we are aware that they may be going up, or otherwise on a quarterly basis. Taxi fares increased by 9%. That's just between June and July, so within the 1 month. That's approximately in line with the increase in the petrol price for that period. However, they've gone up about 16% overall. That's taxi fares, which one probably should note is significantly less than the 50+% that fuel prices have increased over that period. So although that's obviously a big knock on the pockets of people who are using taxis as their form of transport, the increases for public transport are at the moment still less than the increases for petrol itself.
Finally, this increase in CPI comes right on the back of the protests against the rising cost of living. I suppose the question to you is, what can we expect going forward, given that the global inflation situation, that doesn't seem to be improving as well? Those figures are on the rise.
Well, I think internationally there's some silver linings, if we don't want to put it that way. So we have seen the oil price softening, and we know that the petrol price in August actually did come down. And so that would obviously alleviate a bit of the pressure that fuel prices have been putting on the overall inflation rate. We have also seen some of the globally traded commodities, and in particular we could look at products that are the basis of cooking oil. I didn't mention, but cooking oil, is at over 30% year on year. And we have seen both in the producer price index as well as in our import prices that we monitor, some of those commodities starting to drop a little bit in price. So there is a little bit of good news there. And I think that, there's obviously a whole bunch of moving parts that make up the inflation picture. But it's not all doom and gloom, I don't think.
Patrick Kelly, let's leave it there. He is the Chief Director of Price Statistics at Stats SA.